Welcome to Maths Genius. Today we will be covering an important topic in the maths portion.
Welcome back to the lecture series of ST5, and this is your instructor Sardoor Ali, and today we will be discussing and talking about the different risks faced by institutional investors. Now, what are institutional investors? Institutional investors are those which gather and which have a pool of investment, right? There are different types of investors, different types of stakeholders with them. People invest and give their portions of savings to them, like a retirement fund and etc. And then they invest and they give them returns later on in their life. So the risk faced by an institutional investor, these include the first is of course the market risk. A keyword. Again, whenever you are describing one thing, you should have a keyword, right? So, again, the keyword is market value changes of assets held. So, this is the keyword, right, for market risk. The second is any guesses? Yes, it's the credit risk. And for credit risk, it is a risk that a counterparty to an agreement will default, right? So, counterparty fail to fulfill its obligation, or you can write it so that it will default. The third risk that an institution faces is of course what? Operational risk. Operational risk, when you are managing a company, of course the operations and everything, so it is due to mismanagement or fraud. Then we have the liquidity risk. Right? And what is liquidity risk? If you know that what are liquid assets, so cash is the most liquid of them all, and if you study the balance sheet, so it means liquidity risk not having sufficient cash to carry out day-to-day operations. Next, we have currency risk. So when we invest in currencies other than our own, of course, we are faced with less risk. For example, the prices of dollars and each and everything are keep on fluctuating. So this is one risk. Then there is a relative performance risk and relative underperformance risk. Now it states that we are underperforming when compared with other similar institutions. So what are the risks faced by the institutional investor? This is there of market risk, credit risk, operational risk, liquid risk, currency risk, and relative underperformance risk, right? So we can make a short form and it could be L walk R, right? L walk R. L for liquidity, M for market, O for operation, C for credit, C for currency, R for relative underperformance risk.
Thanks for watching. Please like, comment and share this video and subscribe my channel for more videos and updates.